Hello everyone, welcome to our season 3 contest live webinar for today. So I'm Sean here. So is everyone can hear me good? I mean, is my voice everything okay? Can I see some response over here? Everything good? Mm, Yes, yes. Oh, great, indeed, great. Okay, so I guess you guys can hear me clear, right? That's good. All right. Okay, so let's start our webinar for today. So basically, what we're going to cover today is about the chart patterns. Okay, so the first thing we're going to talk about today is I know. I mean, if we look at the charts, look at trend recently, so we know that gold is at all-time highs. Okay, so many traders I think might face the same questions. Okay, so the questions would be like, do we go longs? Okay, or we're expecting a breakout to continue, or do we go shorts? Okay, thinking that the markets maybe is overbought and it's time to short. So I think this is the questions that commonly found in traders, okay, when we see gold are on the all-time high previously, okay, in the last few months, okay. So this is the thing is that is it the right time to do a short or a long? Okay, this is a very common question that we would ask. So, but the truth is, actually both sides can be right or wrong. Okay, so because it's not about guessing when it comes to trading, it's about the directions. It's about knowing the trends. Okay, so today we're going to cover on how we can read the charts like a pro and how we can identify the trends, the market trends, and how we're going to trade on the trends, whether it's on the continuations or a reversal or some things. Okay, so this is what we're going to cover today. So before we start, let me go through some exciting update with everyone's. Okay, so the first thing is we're gonna probably announce that we our partnership with Inter Milan. So it's a major milestone for us. Okay, so to celebrate this partnership, we launched a series of exclusive campaign and event for our clients. So these are some of the events that we have right now. So if you'd like to know more about campaigns or you'd like to participate in it, so just simply scan on the QR codes or on the screens over here. Okay, so to get more details. Okay, and the second thing would be the season 3 demo contest, which is the point that we're having the webinar for today. Okay, so we have officially launched our season 3 demo contest. So actually, this is a chance for you to trade, compete, and win some amazing prize. And also, of course, in this season, we have added a few features and improvements to make the contest more exciting and rewarding. Okay, so these are some of the features over here. Okay, so we got a weekly ranking system, we got a trading hall of fame, and also we got a mystery grand prize. Okay, I think this is the one that everyone looking for. Okay, and of course, we're also having the virtual trading capitals that improve. Okay, so for the more informations and registrations, basically you can just simply visit to our official website. Okay, so I think you will find the details and the registrations page on the event or promotion parts. Okay, so this is our quick update on reasons, campaigns, and events for our Ultima markets. All right, so let's go to our main topic for today. Okay, so the questions back to the questions again. Okay, so back to the questions again. So trading is at trading. The goal is trading at all-time high, and this is where the most traders face the toughest questions. Okay, so for gold, is it the continuations on the uptrend? Is it a pullbacks, or is it the beginning of a bearish reversal? Okay, so today we're gonna break it down step by step and show you how we can read the charts, okay, like a pro, okay, and then how we can identify trends. And then when it comes to tradings and making the right decisions, it will be helpful for us. Okay, so let's start. Let's get started. Okay, all right. Okay, so before we go into our topic, here's a quick walkthrough of what we will be covering for today. Okay, so the first thing is, of course, we're going to talk about the chart patterns, okay, like basics, introductions on the chart patterns. So for those that never really, get into chart patterns, okay, so we're going to make some basic introductions to chart patterns. And for this, I would like to ask, let me see how many people is online right now. So I see there's almost 15%, yeah. Okay, I hope there's more coming in. Okay, so I'm just asking questions. Okay, so is anyone here trades using the chart patterns? Can I see some response? Like if yes, if you're using chart patterns or something, just type yes. Okay, if you're not using, just give me a no or something. Anyone? Are you guys still with me? I see there's 15 right now. Yeah, it's going more, almost 18% over here. Anyone's using chart patterns? Stay with me. Hello guys, come on. No, okay, so finally a response. Come on guys. If you guys could give me some response, it would be very like encouraging for me, okay, to give more details and share more things, okay? So I would like to have like more interactions over here if possible, right? Because I don't want like talking alone to the walls or something. Okay, right, great. So I see there's the Wally, is it Yasin? Okay, Yasin is saying no. Okay, all right. So yes, if you are not using chart patterns, yes. I would recommend you to use it because I think this is one of the most powerful technical analysis tool that available and it's free. Okay, you don't need anything, you don't need any tools, or you just need a chart. Okay, then it would help you a lot in your tradings. Okay, so if you are not really like inputting your the chart patterns to your tradings. So today I think is a good day for you to learn and know how the chart patterns can help us. Okay, so for the second part is that we're going to cover on chart pattern overview as well. Okay, so we're going to talk about what are the common chart patterns we have, and then what are the classifications of the chart patterns. Okay, what are the chart patterns that we should focus on? Okay, and of course, next will be we're going to go through some hands-on example. Okay, how we're going to trade the patterns, and of course, we're gonna cover on some of the common mistakes to avoid when we are using the chart patterns tradings. Okay, all right. So the first thing, let's go. All right. Okay, let me put on one moment my chart. Okay. All right, so what's chart pattern analysis? So basically, chart pattern is one of the most powerful tools in technical trading. Okay, so from the basic concept, for the basic concept, is basically the process of identifying a price structures on charts to understand the market psychologies, okay, and how we can anticipate the potential price move. Okay, so basically this is how we can use chart pattern to help us, okay, to review the market psychologies, okay, and help us to anticipate the next potential move. Okay, it's not a guarantee, but the potential ones. Okay, so this is the chart patterns analysis for. Okay, and the second thing is what are the advantages? Okay, so basically the chart pattern provide us a visual formations on price, okay, so that we have a clarity and a structures, a more identifiable structures, okay, which is allow us to turn the uncertainty of price actions into an actionable trading setup. Okay, so this is what chart pattern can help us. And I believe this is based on my experience, okay, because I'm really very into the chart patterns analysis. Okay, I think this is one of the most powerful tools. So basically, mastering the chart patterns is very important for us to spot the market trend, okay, to spot when is the reversal going to happen and how we can confirm the breakout is powerful, okay, and then from there we can build a very high probabilities trading strategies. Okay, for here we know when it comes to trades, there's no 100%. Okay, there's no guarantee winning strategies. We only go for we only aim to build a high probability tradings. Okay, so chart patterns is the ones that allow able to help us to have the high probability in tradings. Okay, so this is what we have. I mean, what we're looking for in chart patterns. Okay, so the next point is that what are the chart patterns that we need to focus on, and what are the types of chart patterns we can have. Okay, so let's go deeper to talk about the type of chart patterns and their basic functions. Okay, so basically for chart patterns there are two categories. I will categorize it into two categories. Okay, the first one is the trend continuations. Okay, the trend continuations. Okay, and the second one is the trend reversal patterns. Okay, so these are the two different patterns. Okay, so for the trend continuation patterns, okay, this is when, okay, let me put on, okay, this is when the pattern is signaling that the current trend is likely to continue. Okay, for example, let's say we are on an uptrend. Okay, so when the continuation pattern form, it basically signals that the trend is likely to continue go upwards. Okay, this is the trend continuation patterns. So opposite, if let's say it's on the downtrend, okay, so basically when the continuation pattern forms, okay, it will signal the trend slightly go further downside. Okay, so these chart patterns, the continuation pattern it means. Okay, so in that part, during the patterns form, basically we would see that the trend is actually on the resting, okay, before the next further move, okay. All right, so some of the common uh, continuation patterns would include the chart patterns, okay, the flat pattern, sorry. So flat pattern is one of the very common continuations pattern, okay. And then of course we have like triangle patterns, which is include the converging triangles, and then what was it, the descending triangle and the ascending triangles. So these are all the trend continuation patterns. Okay, of course, also includes like channel patterns, and we have even more out there actually. In fact, there's quite a lot of continuation patterns, but those are the common ones that we usually would encounter when it comes to trading. Okay. All right. So the second one would be the trend reversal patterns. So as a name over here, okay, so basically it signals a potential of trend changing. Okay, means that if let's say the market is on an uptrend, okay, if a trend reversals pattern form, this would signal a potential of downtrend reversals. Means that from uptrends, okay, it's going to reverse to a downtrend. Okay, so this is one of the very helpful patterns. Okay, for us to catch the first wave. Okay, so later on when we go to the practical, okay, we're gonna explain how can the trend reversal patterns can be very powerful. Okay, so in fact, for me, okay, this is for me. Okay, my own trading patterns, I would focus more on trend reversal patterns. Okay, so this is what I usually would do. Okay, all right. So basically, it just means a warning sign of a trend change. Means that okay, for example, I'm in an uptrend now. Okay, so I'm gonna change my trend right now. So this is a warning sign. Like okay, I'm gonna change my trends. Okay, the trend is gonna happen change. Okay, so this is a warning sign of a change in trends. Okay, so what are the common pattern we have? Of course, if you guys are familiar about chart patterns, so a few common reversal patterns would be the double tops or double bottoms, or triple tops, triple bottoms, or multiple tops, multiple bottoms. So these are one of the most powerful reversal patterns. And of course, we also have head and shoulder patterns. So this is also another powerful reversal patterns. Okay, and also we have the wedge patterns. Okay, but so this is a tricky parts over here. Okay, for like the wedge patterns or the triangle patterns, they doesn't really mean the trend is going to reverse or continue. Okay, if you are putting on a different context in trends, okay, they can mean differently. Okay, like for example, we see there's a wedge pattern over here, right? Oops. Okay, we see this is a wedge patterns, right? It's actually considered a trend reversals. Okay, but in sometimes the wedge patterns can also signify a continuations. Okay, and for triangle pattern as well. Okay, so we commonly know that the ascending patterns, like the ascending patterns or the what's it called? Sorry, the descending patterns. Okay, so both they are considered a continuation patterns. Okay, but in some cases they can also be translated into a reversal pattern as well. So this is some special knowledge that we like to share over here. Okay, so these are a few things. Okay, so basically, the double tops, double bottom is one of the classic topping or bottoming formations. Okay, so basically, when we see a neckline breakout, it would confirm the reversal. So later on, we're going to share more about this. Okay, and then say, for example, like a wedge pattern. Okay, it basically means the loss of momentum near the end of trends. Okay, so the breakout is going to happen opposite to the previous direction. So these are all the reversals. So later on, we're going to cover on how this pattern is going to what do they mean in the markets? Okay. All right. So just a quick follow-up. Everyone, stay with me. Stay with me, everyone. I see there's 20 packs right now. Everyone's still, like, got too focused or already losing. Okay, right. So let's go to the next parts. Guys, just give me some response if you're here. All right, let me put on. Okay, okay. So let's because preparing the patterns is going to be troublesome. So I will just literally use drawing tools to help with the chart pattern explanations. Okay, so basically over here we're gonna differentiate the chart patterns in two types. Okay, the first one. Okay, let me put on one moment. Okay, the first part will be we're going to cover into two parts. One is the reversal patterns. Okay, we're going to use the reversal. Okay, and then this is the continuation patterns. Okay, so R and C. Okay, maybe I'll do the C first, the continuation pattern first. All right. So one of the most common continuation pattern is the flag patterns. Okay, so how does the flag patterns form? So basically, this is how the flag pattern would usually forms. Okay, so when the trend is going up, and we would move, you will see the price move into a consolidations or a brief pullbacks. Okay, so basically we will form like a small channel or converging patterns over here. Okay, so this is like a formations of a flag. Okay, so this is why we call flag patterns. Okay, so basically when this kind of patterns form in the markets or in the charts, okay, this usually would signify that the trend is likely going into a bullish continuation breakup. Okay, so this is how we can identify the chart patterns. Okay, so for flag patterns, what we would usually do is, okay, if you are a very a conservative or like you're very defensive traders or you're very careful traders, we say careful traders. So what would you usually do is that you would wait for the pullbacks to happen to form the flex patterns. Okay, so this is when the price go into a consolidations or a pullbacks. Okay, and we would wait for the breakup to happen to trade on the bullish continuations. Okay, this is what we would do. Okay, for the flag patterns. Okay, so this is considered as a bullish flag, and opposite one would be the bearish flag. Okay, something like this. Okay, and then when the price break out, sorry, should be on the upgrade. Should be like this. Okay, so and then breakouts. Okay, so basically, if we look at the charts over here, okay, sorry about drawing. let me fix it. Okay, so this is a continuation. Let's do it over here. One moment. Okay, so basically, if let's say we see the flag patterns happens, okay, okay, and then price breakout, or we see there's a bearish flag, bearish one, okay, and then breakouts. So basically, from here, from the pattern itself, we can see that the change of the momentums, the dynamic of the momentums. Okay, for over here we see there's a strong momentum pushing the price up. Okay, and then when the price go up, we know price definitely will come down for a while. Okay, because it need to have a breaks. Price never go all the way up for all the times. Okay, so they definitely going to have a pullbacks. Okay, so when the price pullbacks, we will see the price go down. Okay, but if the trend is strong, if the uptrend is strong, okay, if the uptrend is strong, okay, the pullback of the uptrends, the price, it wouldn't be very deep. It wouldn't be going too far away, okay, because basically the bull is still supporting the price. Okay, so this is when the price having a short-term break. Short-term breaking. Okay, just a break. Okay, there's a pause, having a short-term pause. Okay, so basically they just pause over here. Okay, so once the momentum comes in again, okay, the price will go break out. So this basically signify that the price going on a strong momentum. Okay, and then rest for a while. Okay, resting. Okay, and then come again. Okay, so this is how we can identify the charts, the chart patterns by seeing the how the market dynamic works. Okay, so this is how we can use the chart patterns. Okay, so this is for the continuations. Okay, for the other part is like the reversal patterns. Let's say, okay, so this is basically double top. Okay, we use one of the common example, double tops. Okay, so when the price go up, okay, so there's a pullbacks. Okay, so we see the market is on the rest. Okay, pullbacks. Okay, and then the momentum comes again. Okay, comes again. Okay, so the bull is pushing the price up. Okay, but when the price moving up to the previous resistance, okay, or somewhere here, okay, even a brief one, a brief pickup, okay, and the price pull back again. So what does this mean? Okay, so basically it means that the bull is pushing up the price. Okay, the bear is resisting. Okay, and then the bull supports again. Okay, but the bear is now starting to come in stronger. Okay, so we see the price pullback again. So in this case, we will see a double top pattern forms, and if you look at it, it could be a consolidation trend. Okay, so this is what would happen. Okay, so if the price break below the support, it will means that the bear, okay, the bear is taking over the markets. Okay, it means that the bear is taking control. Okay, and the bull is losing momentum. Okay, means that this fellow is not knocking down the bulls. Okay, so we will see a price breakup. So basically, this would suggest that okay, the uptrend momentum is already losing steam. Okay, and the bear momentum is taking force, and this will lead to a bearish reversal. Okay, so this is how we can use the chart patterns to look at the market's dynamic. Okay, so back to the simple points. Okay, whether you are doing a fundamental analysis or you are doing you're using like technical indicators. Okay, they just simply use. I mean, if let's say we talk about fundamentals. So basically, fundamental just provide us a factor that would contribute to the trends, okay, the factors, okay, but markets may not necessarily react to the fundamentals. Like for example, okay, the market is anticipating the Fed going to cut next week, okay, right? Okay, I think if you guys are knowing about the Fed's the meetings next week, okay, Fed is going to have a very high chances to cut next week, okay, so on the macro funds or on the fundamentalists, okay, rate cuts would be a bearish factor for dollar. Okay, but if we look at the chart right now, the dollar is actually on a short-term uptrend. Okay, so it doesn't make sense, right? Okay, since you are going to cut, why you are still going up? So basically, this just reflect one thing. Okay, market does not necessarily react to fundamental directly all the time. Okay, so from there, what we can do is we could use the chart patterns to see what most of the market participants is really doing right now. Okay, so for example, in this case, let's say Fed is going to cut. Okay, so let's say Fed is going to hike. Okay, because we are doing a double top over here. Okay, so let's say we say Fed is going to hike. Okay, for example. Okay, so technically or maybe like theoretically. Okay, the dollar should be going up because it's on a rate high, right? Okay, so it should be going up. But if from the chart patterns, okay, we are seeing a double tops, this could mean some things. Means that market has already priced in the bullish factor for dollar, okay, when they are expecting the high. Okay, so we will see the price movement would react over here. Okay, but when it comes to this stage, okay, even though the Fed say that they're going to hike, okay, but if the market's price actions tell you, okay, double tops over here, okay, bull is losing steam, bear is taking control, means that market is actually on the reverse point of view right now. So on this stage, we would actually focus on short instead of going long. Okay, because from the chart patterns, they already told us, okay, the market already told us, I'm doing short right now. And we would like to ride on the trends. and not go against it. Okay, so this is how we can use the chart patterns to identify the reversals or the continuations. Okay, all right. So at this point, everyone stay with me. Guys, give me some response, yeah, so that I know I'm not talking alone. Someone with me over here because I'm seeing almost 20 packs here. All right. Okay. So why chart pattern works? So basically, it just reflect the market psychology over here, right? So this is what I covered just now. Okay. Oh, let me put on. Okay. Why my slide won't come out? Okay. So basically, the pattern reflects the buyer and seller behavior. So we always want to know what are the buyer doing, what are the seller doing, or whether the market is on a buyer market or on a seller market. This is what we want to know. Okay. So the second thing is the continuations. So basically, when the continuations happens, okay, when the continuation patterns form, okay, it suggests that the markets, the buyer is still in control or the seller is still in control. Okay, let's for example in the downtrends, okay, if you see a downtrend continuation pattern form, means that the seller are still in control. Okay, and opposite on an uptrends, if a uptrend continuation form, means that buyer is in control. Okay, all right, and then uh the reversal. Okay, reversal. Okay, so basically reversal just means that the shifting is changing. Okay, the control, the power is shifting between the bull and bears. Okay, like we see, let's say for example, double top. Okay, double top patterns. Okay, is a shifting from a bull market to bear markets, and then it's a shifting from the bull taking controls to bear taking control. Okay, so this is how we can see the market psychology works. Okay, and of course, okay, the breakout simply means that okay, either side is taking control. Okay, like for example, like what we covered just now, the double top. Okay, the double top patterns. Okay, so when the double top patterns form, okay, so there is a support over here. So when the price breakout, basically it means that the bear is starting to take control. Okay, so this is what we would focus on. Okay, right. So next one. Okay, so how we trade it. Okay, so next thing, how we would be trading the chart patterns. Okay, and what is the core idea in the chart patterns? Okay, okay, simply put, is basically help us to read the market trends. Okay, so for quick ones, okay, let's recap on our earlier webinars about trends. Okay, I think we covered on the season two. Okay, so I'm not sure any one of you here joined our season two webinar. Okay, previously we did cover on the trend. So let's have a quick recap on it. Okay, and then we'll go into the practical one. All right. Okay. All right. So basically, the trends have three types. Okay, one is uptrend, and then one is downtrend, and the other one is on a sideway. Okay. So let me draw it on again. All right. So uptrends. Okay. So these are uptrends. Okay, and then on the other way is downtrends. Okay. And in some cases, the trend might go into a sideway. Okay. So there are three types of trend. Okay. And of course, trend they move in three ways. Okay, the first one is continuations. Let's say, for example, uptrend continuations. Okay, and on the other case is the trend reversal. Okay, so this is one of the common chart patterns, which is the head and shoulder. Okay, is a trend reversal patterns. And for some cases, we will see trends go upwards and then like consolidates. And further on, you're going to go into a continuations or a reversal as well. Okay, so this is how trend moves. Okay, so we covered earlier in our analysis, our webinar. Okay, okay. The next one would be the market trends. Okay, so basically this is how the trend moves. Okay, uptrends, downtrends, and sideways. All right. So basically, when we use chart patterns to study the charts. Okay, we are actually studying the market trends. We want to know what are the market doing, whether you are on an uptrend, okay, whether you are on a reversal, whether you're going to change your uptrends to downtrends, or whether we are moving into a sideway and then you're going to continue again. Okay, so this is why we would use chart patterns to identify the market trends. Okay, so if you know when you are trading the market trend is very important. Okay, we always say, right, trade along the trends. Okay, right with the trends. Okay, in fact, you can still counter trends. Okay, if you know the trend is going to reverse. Okay, you can still go short. Okay, even if it's an uptrend, because you know that markets might go into a reversal. Okay, so this is why we need to study the market trends. Okay, and then with that we can use chart patterns to study how the trend would go next. Okay, or we will say what are next potential trends. Okay, so this is why we would use chart patterns. Okay, so how can we trade the patterns? Okay, first step, basically what you need to do is spot the patterns between the larger market trends. Okay, so trend context give the patterns meaning. Okay, so if let's say we see there's an uptrend, okay, uptrend, and then we see a double top. Okay, we know that trends might go into a reversal. Okay, but if let's say it's not on an uptrend, okay, you see a double tops, because some people they tend to force a chart patterns. Like for example, during the downtrends, okay, you see a double tops, but in fact these are not double tops. Okay, this is just basically a sideway of a downtrends. Okay, it might signal a continuation. So the first thing you need to know is that what are the trend right now. Okay, and from there you identify the patterns. Okay, what are the patterns that form? Okay, and the next thing is we don't predict the trends. Okay, we don't predict the patterns. We wait for the confirmations. Okay, like for example, double top. Okay, double top over here. Okay, so what you do is you won't go short immediately over here. Okay, of course, if you want with a proper stop loss, you can still do that. Okay, but it's not advisable because you know that the trend might go into a breakout. Okay, unless you are very sensitive to the price actions. Okay, for example, like gold previously, okay, there's a very strong double top patterns, which later we'll cover on. Okay, so you can go for a daring trades, okay, a dare trades, okay, like maybe it's like consider a high risk taker. Okay, if you're a high risk taker, you can still do that as long as you got a good stop loss. Okay, so if you're not, so basically what we will do is we always wait for a confirmations breakout. Okay. Okay, and the next one is, of course, when we trade on the chart patterns. Okay, of course we need to have the entry signal confirmations. Okay, so what we usually would do is we would entry on a lower time frames. Okay, this is what we have covered early on our season 2 webinar as well. Okay, which is we also cover on how we can analyze the market through the multi-time frame analysis. Okay, so this is one of the a very powerful way to work along with the chart patterns. Okay, so these 3 things that we need to know about. Okay, so how we can trade it. Okay, let's go for some practicals. Okay, so over here, let's look at the gold. Okay, so anyone here is a strong on gold short? Anyone here? I mean, because actually I have a lot of trader friends. Okay, so in early periods, I mean during the long bull, in the gold trends. Okay, I see many of my friends, my trader friends. Okay, they are actually going shorts. Okay, they short on gold because they think that the market is on overbought. So they go shorts. They keep on shorting the golds. Okay, they expect the gold going to have a very strong pullbacks. So if let's say you really want to go on the counter trends, okay, or you want to catch the first wave of the gold pullbacks, okay, because you know gold on a very strong bull. Okay, we know that it's on a very strong bull, and the price definitely going to pull back some days. Okay, but the point is we don't know when, right? We have no idea because we can't predict the markets. Okay, so what you can do is you always wait for the chart patterns to form. Okay, so for example over here, is one of a very powerful, very strong patterns form, which is the double top. Okay, so for the first part, if let's say we look at the gold charts, okay, let me put on the live chart easier. Okay, I'll put on live charts. Okay, this is my charts over here. Okay, so for example, if you look at the charts over here, look at the gold charts. Basically, on the day chart, okay, on the day chart, you will see that there's a strong rally, okay, strong rally in gold. Okay, and basically you can see there's a day, this is the day charts. Okay, you see a bull candles and maybe a very short bear candle, okay, just a very few ones and very minimum one. Okay, so basically there's no significant pullback yet. Okay, so if let's say for example, because we don't trade, I mean, if let's, I mean, most of us don't really trade on the day chart, right? Because day chart is like you will have very few opportunities. Okay, so basically, I believe most of us here would analyze on the day chart, okay, and trade on a lower time frames. Correct. So this is what we will do. Okay, we see there's a bull, there's strong rally. Okay, and at this point, we see a very strong rally against almost like $80 of rally, right? $80, $90, and another this over here is like $120 of rally. Okay, it's a very strong rally in gold. Okay, so if let's say you switch to the shorter time frame, you will see there is a strong pullback over here. Okay, throughout the whole rally. Okay, throughout the whole rally. Okay, this is one of the most significant pullback. Okay, and then the price go for a sharp rebound again, and then pullbacks. Okay, so at this point, basically, okay, if let's say you are looking at the 4-hour charts, okay, at this point, when the top form, okay, when the top form over here, okay, over 4380, this basically means that the bear is starting to form. Okay, the bear momentum is starting to form. Okay, and if you're seeing another bear candle over here, so you know that, okay, you can actually predict that, okay, excuse me, which is the momentum start to losing steam and a potential double top patterns is likely to form. Okay, so this is when we gonna ready to go for a short instead of all the while when the trend is actually on a bullish trend over here. Okay, so if let's say you are on our daily market analysis, okay, you are on our analysis every day. Basically, we do cover on the double top patterns over here. Okay, so this is where we can start to prepare for a short. So of course, if you are a dash, so you are a fighter. Okay, you could really start to position yourself over here. Okay, if you really want, okay, with a decent stop loss, okay, it's still reasonable. Okay, but what you can do is actually you wait for the breakout. Okay, so basically, of course, if you are not a day trader, okay, you would potentially miss the breakout and the confirmations of the double top reversal. Okay, this slightly happen. But if you are looking at the charts, if you happen to look at the charts at the time of this form, or you already see there is a potential double top form, okay, you're ready for a breakout over here. Okay, so what you would do is you wait for a shorter time frame breakout, which is over here. Okay, so let's say over here, basically you could start to go for a short. Okay, but of course, if you are strong, if you are a very experienced trader, if you are considered a day traders or something, okay, actually, if you look at the charts over a shorter time frame, okay, you would in fact also see a potential reversal pattern forms over here. Okay, if you're on the day traders, you are day traders. Okay, this is basically a reversal patterns that form. Okay, over here. Okay, so somewhere over here. This is the one over here. Okay, this small reversal form, and of course over here as well. Okay, so this is when the trend start to reverse. Okay, if you're a day trader, you could position yourself for the shorts. Okay, All right, so this is one of the example. So for now, okay, let's say for now, what can we do on Go? Okay, what can we prepare for Go? Okay, so basically now we could focus on the other trends right now. Okay, so what we will do over here is over here on the date on longer time frames, okay, it's an uptrend. Okay, it's an uptrend. So let me where's my cursor? Okay, yeah, it's an uptrend over here. Okay, so now we see gold is actually on a pullback phase. Okay, so gold is on a correction move, and usually on an uptrend, okay, the price will pull back and may have a continuations again. Okay, but the point is, when is the price going to rally again? Okay, of course, for now we can't we don't really know because why? Because the price can pull back deeper. Okay, we still could see the price pull back deeper. But one of the things that we could focus on the goal is now we're going to focus on the 4,000 level. Okay, 4,000 level is one that we want to focus. Okay, this could form a strong support. But is it right time to go long yet? If you're a swing trader, okay, of course it's still not the time. Okay, so what we could do is we wait for the patterns to form. Okay, so at this point we will see on the lower time frames. Let me put on again. One moment. Okay, we see there's a downtrend form over here. Okay, on a shorter time frame, and now the price going to a sideways. Okay, correct. Okay, so at this point we know that the 4,000 level is the support that we want to focus on. So what we could do next is, of course, okay, if you are swing traders, you could wait for a potential double top pattern to form again. See if the pattern does really form or not. Okay, so if let's say the double top pattern forms, okay, for example over here, sorry, double bottom, okay, forms, this could mean that the near-term trends could go into the reverse again, could go into reverse again. So what we could do is we will wait for the breakout over here. I think this might be a big one, okay? So wait for breakouts and you go for a long gains, okay? But this will be on a larger time frames, okay? But if let's say you want to be a day trade on gold, okay? So this is what we would do next, okay? We identify that the trend is actually still on a downtrend, okay? The mid-term trends, okay, is still on a downtrend, okay? And now it's going into a sideways. So what would you do is you can switch to a lower time frames, okay, and you look for a short-term reversal patterns. Okay, so what we do, what do we have here? Basically, over here, like this is the one. Okay, I actually short on this now. Okay, so basically this is the one that we can short on. Okay, which is the short-term reversal pattern has formed. Okay, over here, okay, uptrends, we see short-term uptrends. Okay, and if you would see, I mean, if you would see that, you would say that basically that could be a double top or even a head and shoulder patterns. Okay, so because of course, we can't be very, what to say, like you can't be very like very eager to know to have a name for the patterns. Okay, basically patterns, the name patterns like head and shoulder, double tops, it's just a name. Okay, what are the most important thing is that we want to see how the market react. Okay, so basically over here, you will see that there is a short-term uptrends over here. Okay, and now the trend turn into consolidations and breakout. The breakdown. Okay, so basically this signal a trend reverse on a short-term trend. Okay, but on a mid-terms, okay, it's basically a resistance over here, means that the price might go into a consolidations. Okay, so you would want to trade on the short-term movement between the range. Okay, so what we would do is we would switch to 15 minutes or 30 minutes, up to you. Okay, but for me, because I'm doing a day trade, so I would use 15 minutes or even 5 minutes, okay, to trade on the breakout. Okay, so these are the breakout. Okay, and then you wait for the price to pull back. Okay, and for me, I would use the MACD for help. Okay, so basically, if the MACD are not above the zero line, I will go for a short. Okay, so this is what we will do. Okay, so this is how we can trade on the chart patterns. Okay, so for example over here, we will see this previously USDJPY. Okay, over here we see there's a downtrend consolidate. Okay, downtrend, okay, downtrend consolidates. Okay, and price breakout, pullbacks, and then consolidate again. Okay, but this is having a very long torture period. And then of course after that we see the what was it the USDJPY on the breakout and then pullbacks and is supported above 150. Okay, so basically this provides us a reversal patterns, okay, which is from here, okay, is from a downtrend turning into an uptrend, but the uptrends move into a consolidation trend and breakout. So it forms a for this case, it's actually more on a continuations. Okay, so basically over here, the channel, short-term channel, is the one that we want to focus. Okay, so this is where we can start to go in for a long, or if you are more confident traders, you would go for a buy on a pullbacks. Okay, which is the 150. Okay, switching from a resistance to a support. So this is where we want to go for a long as well. Okay, this is the resistance, and now it turns into a support. Okay, so this is how we can use chart patterns to find our entry. Okay, so let's see what else we have. Okay, so oops. Okay, I think that's all for today. That's all for the sessions of how we trade the chart patterns. So at this point, everyone still with me? Is it good? I see you guys are not responding to me. Huh? Come on, guys, give me some reactions, please. I see there's 20 packs over here. Come on. All right, I see it. I see a thumbs up over here. Okay, thank you for your reactions. That's great. Yeah, great. Thank you, guys. Okay, all right. So all good so far. Does it help you guys? Okay, so if there's any questions, just leave a message in the chat. I'll answer to it. Okay, and give me some response as well. If I mean type something, yes, no, whatever. Okay, right. Okay, let me clear my drawings. Okay, so last part. So what are the common mistakes we need to avoid? Okay, when we are having when we are trading with the chart patterns. Okay, so these are a few things that we need to avoid, okay, when we trade the chart patterns. Okay, so the first thing is, of course, we want to avoid to entering the trades too early. Okay, so like for example, like what we said just now, like double tops patterns. Okay, so it's actually just a potential. Like for example, we do it this way. Okay, like for example, double tops. Okay, over here, so this is a double tops. Okay, so at this point, okay, this basically just means that the double top is potentially formed. Okay, it does not confirm a reversal yet. Okay, so for my advice is you don't trade immediately because the double tops could actually translate into a continuation as well. Okay, because if I say, especially if the trend is really strong. Okay, so what we would do is we always wait for the breakout and the confirmations of the patterns. Okay, unless you are very familiar with chart patterns, like what we can see in gold, previous the one that we mentioned just now. Okay, you can see there's a very strong momentum building up. Okay, and you can go for a try. Okay, you can go for it. I mean, we know that we know that trading is a risk. It's taking a risk. Okay, as long as you are doing calculated risk, then it's fine. Okay, so but of course, if you are not like very experienced enough, or you are not very confident enough. Okay, so I would advise my advice to you would be try to wait for the patterns to confirm. Okay, to confirm. Okay, so do not enter the trades too early. Okay, unless you are very confident and you have a very good calculated risk. Okay, in place. Okay, right. The second thing is you don't ignore the trends. Okay, like for example, if I say the trend is very strong, okay, you don't go short right away when you see this potential double tops. Okay, because the trends, like for example, if you look at the gold, let's say let's take a look at the gold. Okay, I think if you look at the charts earlier, okay, you would potentially see some double tops over here. Let me see. Let me have a look. What are the double top potential double top over here? Is there anyone? Is there any double tops over here? Yeah. This is the one. Yeah, correct. To be honest, I got wiped out over here for doing the short slowly. Yeah, this is double top. Okay, this is the double top. Okay, so basically over here, I would say this is a confirmed patterns, but of course, the confirmed patterns can still wrong. Okay, so this is what we will cover as the next one. Okay, so we will still wrong, especially when the trend are really strong over here. So basically, when the price move up, okay, this would invalidate the reversal patterns. Okay, so over here, you need to have the invalidations level. Okay, like for example, in this case, go. Okay, so when the double top patterns over here, okay, forms. Okay, this is the confirmations, pullbacks. Here's a good point of short. Okay, if let's say you are not taking profit over here and then price pullback again. So basically, when we see this, it basically invalidates the reversal. Okay, so at this point we cannot ignore the trends because we know the trend is actually very strong. Okay, and also because we could not ignore the invalidations level. Okay, so this is why we need to have the countermeasures or the protections for us. Okay, so these are two things. Okay, ignoring the trends, we couldn't do that. Okay, we should not do that. Okay, and we need to have the invalidations level. Okay, so if let's say the level is breakout, okay, we know that the reversal is fear. Okay, you are not wrong, you are correct because you are following your methods, you are following your rules. Okay, but market they never uh, going to be 100% right all the times. Okay, it's never going to be 100% on your way. Okay, on the directions that you want. Okay, it can be wrong sometimes. Okay, it doesn't matter. Okay, as long as you need to have the invalidations level and you have a good stop loss, and that's good enough. Okay, so and of course you should not force the patterns to happen. Okay, like you just seeing the price actions over there, and then you say, "Oh, this is double tops. I'm going shorts, and this is a head and shoulder. I'm going shorts." Something. Okay, so you don't do that. You always want to understand the market trends. Okay, that's why it's very important to really uh, learn about chart patterns. Okay, so chart patterns is not just names. Okay, it's not just like double tops, double bottoms, or some things. Okay, it's basically help us to identify, to see the market trends, to see the market dynamics, okay, using the charts patterns. Okay, means that it's not just double tops, or flat patterns or some things. Okay, like what I covered just now. Okay, over here, basically you will see goals. Sorry, no. The goal is on the reversal patterns. Okay, because if you look at the short-term trends, okay, you would already see the trend is on an uptrend starting turn into a downtrend. Okay, so this is how we can use the chart patterns. So we don't force the patterns to happen. We're not going to say like oh this is a head and shoulder or something. Okay, I know I say it's a head and shoulder, right? But if you're experienced enough, basically it just helps us to see all the line. Okay, where are the high, where are the lows? Okay, or in this case, it's actually a helpful tools if let's say you want to learn about chart patterns. You could turn your charts into a line chart, okay, to help you. Okay, but this is not really good enough. Okay, let me see. Yeah, you could use this. Okay, the line charts over here. Okay, so basically you will see the higher low, lower low is breaking up. Okay, these are all the places where you can start to ready your trades. Okay, so this is how we can do. Okay, and of course, don't chase the breakout. Okay, in some cases, uh, the 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 the, the breakout can be a false breakout. Okay, so what we usually would do is, if you are missing out the trades, okay, like for example over here gold, okay, like this one, okay, like that over here. Okay, if let's say you're missing out this, okay, you're missing out the breakout, okay, you don't go short over here. Okay, unless you are going on a day trade, okay, you can stay short, of course. But if you are not a day traders, you are you're more like a swing traders, or you trade on the 2 hour trends or 4 hour trends, okay, you don't chase the breakout, okay, because sometimes if you chase the breakout, for example over here, okay, maybe you chase the breakout over here, you will still have some profits, okay, you will still have some. But in some cases, if you chase the breakout, the price would rebound first and then only come down. Okay, and of course you probably would got wipe out over here. Okay, so try not to chase the breakout. If you miss the trades, what you can do is you can try to switch to a shorter time frame. Okay, for example over here, okay, to find a setup. Okay, so this is what we advise you to do. If let's say you miss out, okay, for example, oh, you see that there's a very beautiful double top patterns over here. Okay, oh, but then because you are working, or because you are having a family dinners or something, and then you miss out the trades. Okay, don't chase the breakout. And if you really want to participate in the momentums, okay, try to go to a shorter time frames. Okay, and then uh, trade using a shorter time frames with a stop loss that cater to the time frames. Okay, means that if you are trading on a 15 minutes, okay, you don't use a 1 hour or a 4 hour chart stop loss. Okay, you don't put your stop loss over here or something. Okay, yeah, otherwise you will get like very heavy loss over here. Okay, so this is what we would want to avoid when we trade on the chart patterns. Okay. All right. So I think this is almost the time over here. All right. So basically, this is what we're going to cover for today. All right. So anyone still have any questions would like to ask? Yes, you guys are not responding to me again. uh, I hope there's more response over here, so you'll be very great for me. All right. So if there's no questions, then I guess this will be the end for our session for today. And of course, just a recap again. So basically, now we are launching our new season 3 demo contest again. Okay. So these are the features that we have. So the next thing is, of course, we would, I mean, if let's say you would like to participate in the, what will we say, in the competitions, okay, just go over to our official website and look for our promotions and campaigns, okay, and then you can go and register on that if you would like to participate, okay. All right, so I see Yasin asked, do you think gold price will reach 5,000? Okay, right. To be honest, I can't predict the price whether it will go until 5,000. Okay, but based on current momentums, I mean, you based on a long-term view. Okay, if let's say if you guys goes, I mean, if you study on the gold fundamentals, okay, the central bank is buying. Okay, the central bank is buying, and now the market is seeing gold as a very structured investment tools. Okay, you can read the one of my articles on our page. Is about the what was it called? It's on the market news site. Okay, I cover on one of the things is by the Gold Council. Okay, Council reports. Okay, so I believe gold still have the potential upside. Okay, uh, we're not going to say whether it's going to go up to 5,000 first. Okay, we're not saying this first. Okay, but I believe okay, gold still having a potential for more upside. Okay, but the point is, like what I say, we need to have the confirmations from the price actions by using the chart patterns. Okay, so once you're going through the chart patterns, okay, basically if the price starts to stable over here and you see the breakout, this would give you the opportunity to position yourself for the next wave up. Okay, so basically, if let's say you are able to position yourself for a long-term trends, okay, for uptrends, okay, you would have a good entry level. And at that point, only you consider, only you trade on the markets, okay, whether it will go into a 5,000, okay. You understand what I mean? It means that you don't predict how far the market will go, okay. You try to position yourself at the best point, okay, as you can. Okay, for example, whether you will see the pullback stop here. Okay, if the correction wave stop over here, and you manage to find a good entry, then only you consider whether you are on a potential. You are on a good trend, on a good point to 5,000. Okay, so this is what we can do. Okay, so, but at this point, I believe 4,005 is still a good potential one. Okay? I mean, if you want my opinions, okay, this is just a disclaimer. Okay, it's not a predictions. Okay, it's not on behalf of Ultima. Okay, disclaimer. Okay, so I'm still believing gold has the upside. Okay, in overall. Okay, so at this point, we just wait for the correction to finish. Okay, and then we start to look for a good entry point for a mid to long term positions. Okay, so this is what we can have. All right. So when the contest starts, I think it's, if not wrong, it will start on November. Okay, it will start on November. Okay, so you can just go over to our official page. You have more details over there. And also, there's one thing I want to remind you guys. Please go through the terms and conditions. Okay, because previously I think they are saying that our term is not fair. Okay, but so to avoid of any conflicts, okay, remember, if you after you participate, so remember to go through the terms and conditions again. Okay, all right. So if there's no more question, then I think this will be the end of our sessions. And thank you, everyone. So I guess I will see you guys soon because I think we'll have another sessions next. Okay. All right. So it's a Friday. So thank you everyone and have a good Fridays, everyone. Bye bye.